A daily trading volume of around $300 billion is recorded by the New York Stock Exchange, Nasdaq, and the Tokyo Stock Exchange, the three largest stock exchanges worldwide. The foreign exchange market has an average daily volume of $6.6 trillion, as reported by the Bank for International Settlements or BIS, the world's central bank. Hey, let's talk Forex lifestyle. How do these young travelers get their money to go shopping while on vacation? And why does this market even exist? I'll investigate these questions and more in this video below. What is it that makes the foreign currency market so powerful? These exchanges are done by whom and who are they? Why is the pound so highly valued compared to other currencies when you're here? A globalized world means that businesses are increasingly reliant on global supply chains to ensure that their products and services are produced in the best countries possible. You want something cheaply manufactured in China, you want something built to the highest standards possible in Germany, and you want to import Japanese seafood. 100 years ago, this wasn't the case, and most countries thought you should produce something locally as trade was practically non-existent. Today, this is the norm, and it might be difficult for some people to find something in their house that was produced in their home country. This is because the world has put it on to the idea of comparative advantage. Even if you ask Germany to produce iPhones, they could easily do so because they have the necessary infrastructure and technical know-how to do so. However, Germany's high labor costs are strict. Environmental regulations regarding industrial waste means that German iPhones would cost an astronomical amount, based on an educated estimate. The same goes for high-end luxury sports cars, which he may be able to create. Because they are a little... China has shown that they have the industrial ability to create and construct it. As a result of China's greater low-skilled workforce and laxer environmental restrictions, the country is better suited to mass medium-grade manufacturing, such as the production of iPhones. When it comes down to it, this means that instead of Germany and China attempting to utilize part of the resources and labor force to create obscenely cost phones for themselves, I'll stick with what I do best. As a result, Germany will produce the cars and China will produce the phones, allowing both countries' citizens to afford cars and phones at lower prices. Everyone wins. Germany will trade some of its funds for China's funds. Germany receives lower cost funds than it could have produced independently, and China receives better cars than it could have reduced this to. There is a secondary market for currency exchange because suddenly you're not just exchanging cars and phones but also euros and your plans. So, the forex exchange market has grown to be so large because global trade has grown to necessitate it. Yes, this isn't a good thing. But Chinese iPhone manufacturers aren't interested in being tied to euros, and German cars manufacturers aren't interested in being tied to Chinese. 44 countries met in July 1944 at the Mount Washington Hotel in Bretton Woods, Washington, to establish a gold standard for currencies. The conference established the International Monetary Fund and the World Bank, but most importantly, it set up the guidelines for a fixed exchange rate system, which established a gold price of $35 per ounce. An unprecedented 14.3% depreciation of the British pound was caused by the government's aggressive attempts to restore the currency to its planned level in 1967, when there was a gold rush. I directed Secretary Connolly to temporarily suspend dollar convertibility into gold or other reserved assets in 1971, when President Nixon took America off the gold standard, and by late 1973, the system had collapsed and participating countries were allowed to float their currencies. This meant that currencies were tried on the open market just like shares, cooked beans, or beanies. Aside from trading currencies when I go on vacation or doing some online shopping through a website that doesn't automatically convert to local currency, most people probably don't have much exposure to the foreign exchange market outside of these retail transactions that make up a tiny percentage of the total foreign exchange market. While the information presented here is basic, there is a potential issue area. As of 2014, an American fast food chain is doing well in the United States, and they've decided to open a new store in Australia, which will cost about 55 million Australian dollars as an initial investment. This is enough to pay for some new restaurants to be built and other supplies and equipment until the business stock begins to turn a profit. If you're intending to manage an international firm, you need to be aware of the danger of currency fluctuations. Those who are willing to take the risk prefer to do so within the scope of their professional expertise. To avoid going out of business because the forex market did something weird, I would rather take a risk because I know a lot of more Instagrammable burger franchises have opened in the same market, which brings us to the investor. Investors love the forex market because of the potential for returns. It represents for investors products that have been exposed to low temperatures. You should always remember that a derivative is just a made-up thing whose value is derived from other assets. Investors will make a bet with a company, betting that the value of a foreign currency will rise or fall in relation to the currencies in their home market. And in the case of a rising or falling value, the company will make a payment to the investor. If the Australian currency were to rise during this period, the fast food firm would otherwise have earned $100,000, but it would have to pay the investor $25,000. This situation has two possible outcomes: a stable $75 million, which is the $25 million profit, or a risky investment, which is what investing is all about. Since both investors and international businesses are eager to avoid foreign exchange risk while also hoping to reap potential speculative rewards, this is a match made in heaven. Governments, on the other hand, are the easiest to manipulate, with some governments, such as China's, aiming to lower the value of their currency abroad. Okay, so I'm a little lost. Note that the British pound has always been the most valued currency in the world despite all the speculative trading and volatility. There's no good reason why, historically, when currencies were tied to the value of precious metals, $1 could be exchanged for 1.5 grams of gold, £1 of sterling could be exchanged for £1 of sterling silver, which was and still is much more valuable than 1.5 grams of gold. The pound sterling has taken a hit because of the Brexit turmoil, but it is still the world's most expensive currency unit for unit. This general confusion stems from the fact that most people are more used to purchasing things that have an intrinsic value, such as a Toyota Corolla, than they are purchasing something that has no intrinsic value. Thanks for watching, and please consider subscribing and liking if you did. I'll be on the Discourse link in the video description for an hour after this video goes live to answer any of your questions or just for a chat. Otherwise, I will do my very best to respond all of your genuine comments in the comments below.